also on the fundamental part, and also most importantly my true objective in wanting to invest. Because Jay has actually emphasized a lot on what are you looking for out of an investment, so I guess all of these are my main takeaway from this course. And I also definitely recommend this course to my friends because I think it helps to break down investment into very simple parts that all of us can understand, whether it's beginners, amateurs, or those who are just keen on investing. Yeah, actually, Jay has a point system to help us evaluate whether a stock is should be a good pick or a bad pick. Yeah, so all of these are very easy to follow steps for people who are keen on investing. Thank you.
The digital world is ever-changing. With more than 20 years of experience in serving the investing public and the financial services industry, Cybercode has been providing financial training and information technology solutions for established clients. Cybercode is based in Singapore with 7 offices around the globe and continually expanding. Being ISO 27001 certified and having a proven reputation for service excellence, Cybercode endeavors to build long-term relationships with customers and business partners alike. Our services include, but not limited to, the following: investing public, to provide training programs to the public, such as investment and stock trading courses. Financial professionals, providing up-to-date training courses for the finance professionals, keeping them well informed with compliance, regulatory requirements, financial products, and best practices. Financial technology. We develop and provide information technology solutions and management services, curated specifically for our clients' needs. Cybersecurity and data. We provide data, information, analytics, and cybersecurity services to your business, keeping your data safe. Since our inception, we have trained thousands of participants among the investing public, financial professionals, hundreds of B2B clients, and have continued to forge strong business partners. To find out more about what we do and how we can help you, contact us today. Cybercode is a leading financial training provider and a leading developer of information technology solutions and management services.
Hello, hi, my name is Abby. I just finished the MIW course, and what I can say that prior to this course, I thought my fundamental analysis was very good, and I thought my technical was fairly okay, but after this course with Jay, he really highlighted a lot of basic things and also certain in-depth things that was related to the current industry. And I can say that it was something that is really enlightening, and it was a really good course that I would recommend to everyone who wants to instill more knowledge on technical and also fundamental analysis. And yes, definitely I will recommend it to most of my friends who are in this industry and whoever who is interested in stock analytics. Thank you.
The Institute of Banking and Finance, or IBF, was established to foster and develop the professional competencies of the financial sector. IBF is dedicated to empowering practitioners with capabilities to support the growth of the Asian financial industry. It is the national accreditation and certification agency for financial sector competency. Developed by the industry for the industry, IBF Standards is a set of competency standards benchmarked to international best practices. IBF's vision is to be the Asian standard of excellence for practitioners in finance. IBF Standards covers 13 industry segments and offers a wide range of development roadmaps. IBF Standards offers accredited programs to guide a financial practitioner from licensing examinations to professional certification. IBF Standards certifies financial practitioners at 3 levels. An IBF qualified individual is one who is equipped with a broad base of capabilities and foundational competencies to undertake new roles. An IBF Advanced Individual is one who has acquired applied knowledge and complex analytical skills for specialists or leadership functions. An IBF Fellow is an industry veteran who has demonstrated professional mastery and exemplifies thought leadership and commitment to industry. The IBF certification mark, a set of parallel elevation bars, symbolizes the close partnership between IBF and the industry. IBF certification is therefore an industry-endorsed mark of quality that recognizes individuals who exhibit professional excellence, integrity, and commitment to the industry. Be part of the IBF community of certified financial practitioners. Participate in continuing professional development programs. Avail yourself to learning resources to plan your career. There are also opportunities for mentoring and networking. IBF, the Asian Standard of Excellence for Practitioners in Finance.
Hi, good day. My name is Kotong. I just attended MIW. Okay, the key things I took away actually is two things. One is a framework to actually use fundamental analysis and technical analysis and how to synergize them together such that you can actually look for value stocks and for you actually to catch on the opportunities for the shares actually trending higher or lower. And the second thing that I learned is not a lot of other courses in all those other big courses will actually offer you is actually position sizing, because in this case most of the investors will try to jump into a position right away after a jump out with their entire position up in this case. What actually taught us is actually to do it in sizes such that you can actually catch on your opportunities, and as well as allowing another portion of your investment to actually to ride onto the trend itself. And this can actually eliminate the psychological biases that most investors will actually fall onto it. So therefore, based on these two key learning lessons, I would highly recommend you to actually take in MIW. Thank you.
So when I came upon this topic on called behavioral finance, I started to realize that the crux of a successful investor or trader is not about selecting stock. It's about managing the portfolio of stocks they own. We manage the risk, not only just managing the risk, we also manage the psychology of ourselves. The only best way to service to a client is really through a standard process, guidelines, and also to understand what the client really needs and automate and on day. And this will generally help clients not only to provide the best service for clients, but also to help clients to gain wisdom, knowledge, and getting the best investment decision for themselves. So that this is what I do normally. The perfect strategy to me is a unique strategy that fits to the person's objective and wants.
During this class, Jay actually shared a lot of his personal experience and made certain concepts very clear to me. Like what is a trend, what is a momentum, causes actually help me to understand the technical analysis and also the fundamental side.
He's able to convey very effectively the substance and the knowledge. I find him very pragmatic and his approach is very prudent.
Join my course and learn how to make your investment work for you today.
Investment in artificial intelligence is booming worldwide. Driven by the release of ChatGPT last November, the surge in AI investment has increased the demand for data centers and real estate investment trusts that specialize in these facilities. Singapore REITs with substantial data center assets and exposure include Keppel DC REITs, Digital Core REITs, and Capitaland Ascendas REITs. KDC REITs manages 3.7 billion Singapore dollars in assets, which include 23 data centers across 9 countries as of June 30th, 2023. In its H1 2023 financial results, KDC REITs saw its gross revenue rise 3.6% YOY to 140.5 million Singapore dollars, and net property income increased 3.3% YOY to 127.4 million Singapore dollars. DC REITs meanwhile has a portfolio of 11 data centers located in key metros in the US, Canada, and Germany, with assets under management of $1.6 billion as of June 30th, 2023. Capitaland Ascendas REITs also completed the acquisition of its fifth data center in the UK for 200 million Singapore dollars, boosting its data center investments in the nation by 54% to 569.8 million Singapore dollars. This would increase Capitaland Ascendas REIT's total data center portfolio by 15% to be valued at 1.5 billion Singapore dollars in terms of assets under management. Scan or click link in description to learn more or join SGX Invest on Telegram for the latest news update. Please note this is a general commentary of historical performance and not necessarily indicative of future performance. Check out our investment courses that are up to 70% subsidized at cyberquote.com/sg or contact us at support@cyberquote.com.sg.
Hi, very good afternoon, ladies and gentlemen. Thank you for tuning in for this afternoon, the webinar session. Our webinar title, Why Do Share Prices Go Up and Down? By Jay Chow, Wealth Manager from Philips Securities, IBF Accredited Trainer, as also the Associate Trainer with CyberCode. Now, do allow me to do a short introduction of the company as well as the keynote speaker today, Jay. Now, my name is Andy. I'm representative of the company CyberCode. Now, indeed, those who are following through our company CyberCode throughout the years since 1996, we're providing a financial investment courses to the retail individual and, of course, as well as to the corporate level of those IT security courses. Now, also CBD courses to the retail, to the corporate B2B level as well. Now, indeed, for close to 3 years, I think we all aware about this, the COVID pandemic when hit whole worldwide. So as Singapore also affected. Now, the good piece of news to share with you here, if today you're joining as a citizen or permanent resident, right, we have one of the course called Making Investment Work course, proudly taught by our wealth manager, GHL, will be shared towards the end of session. So basically, you can get up to cost subsidy of 70% the cost fee, right? Now, of course, the other things, Jay also conducted also the other so-called courses, the modular classes as well, very so-called the price reasonable fee that towards the end of session, Jay going to share with all you as well. Now, indeed, he also shared about one of the conducted one of the after this COVID pandemic, one of the face-to-face physical session of this session, which I think you can see on the slide here, right? Live in the person preview, right? That will be happening in the 21st of November, the evening 7:30 to 9:30. For those who are keen to join in, please feel free to scan the QR code, right? So basically you can join in. This will be the physical, this face-to-face session. Now, indeed, we also strongly urge all of you to bring along your friends, as many friends as possible, to join for this exciting face-to-face physical session. You can have a opportunity to have ask question to in front of the J or this wealth manager, right? Okay, now of course to talk about a little bit of Jay Chia himself. Now, indeed, Jay basically he start off a business. Usually, I think this will be stepping into his 16 years in this financial business. I joined as a police security as a stockbroker and then moving on to take a second license, FA license, and TR license. Now, indeed, for the last 3 years, he's taking a much higher role as a wealth manager taking care of, I think as of today, the AUM, the asset under management should be more than $3 to $5 million, right? So it's still escalating in increasing his asset under management. Now, Jay basically believing using both fundamental as well as technical analysis. And the other portion that as he also believe of using some form of the behavioral finance, which is not many speaker and trainer in Singapore do that. So basically, he will able to share with you here for this 2 hour session with his vast knowledge of past 16 to 17 years on this area, right? Now, of course, today we also connected into the Facebook Live. Now, individual who view from Facebook Live can feel free to post a question into the comments column. Now, for those who join via Zoom, yes, you are more than welcome to post your question into the this chat or Q&A. So in appropriate time, definitely Jay will provide the reply. So we have to make it more interactive for this 2 hour session, right? So as for all of us to learn more meaningful session for this 2 hour session. So I'm strongly urge all of you can post question when the moment when Jay asks for you to involvement. So yeah, I think it's good that actually all of us involved to post some question on that, right? Now, of course, the end of session, definitely myself and Jay going to share with you for these two different courses, the IBF courses, making investment work course as the two modular class, as well as the session you just mentioned, the face-to-face training session, and this on 23rd of November. So without much delay, I shall cordially invite Jay to take over the mic from here. Right, Jay, please.
Yes, a very good afternoon to everyone, and thank you, Andy, for the introduction. I hope that today, in today's session, I will be able to share with you my personal knowledge and what I experienced, and not only just my personal knowledge, but it's also knowledge that my clients always like to ask me. One of the most common questions that my clients always like to ask me is that, Jay, how come today the share price goes up? How come today the share price goes down? Or even for the past few days, you've seen that the Straits Times Index has tumbled down quite strongly. Various questions are always revolving about share prices. So therefore, I felt that it's really, really important to address this question because it's going to be a very valid questions which will help us to understand the foundation of investing in the stock market itself. And very often, I also have clients who have been many years of experience asking me the same question. And even those who are really very new to the market, never invest before, they also ask this similar question. Why? Definitely, there are a lot more questions that is going to be asked by my clients. And in this last quarter of this year, I'm going to explore and share with you what other why questions is going to be done. But as for today, I'm going to share with you why the share prices goes up and down. And of course, over the years, education becomes something that I'm passionate for, and I always want to help people to understand. So when Philip Capital itself invited me to be a guest speaker for many of the events like Invest Fair, SGX Connect, or even several SGX events, I will always be willing to volunteer myself. Well, very often during this kind of affairs, when I have participants coming up to me to ask questions like why share prices go up and down, it's very hard for me to fully explain everything, the full concept of investing in stock market, and more importantly, how to make their investment work for them. So in this short 1 hour or 2 hours session, I'm afraid that it's impossible to really break down the whole magnitude of investment into 1-2 hours for you to really understand. I think the best way is really to formulate a course for every individual to be able to have a structural, systematic process to understand how to make their investment work for them. And indeed, the main theme for me to always tell people is that learn how to make the investment work for you, not the other way around. Always looking at stock market prices and hope and see how the prices move so that you can make money out of it. To me, that is working for the investment, not having the investment to work for us. Many of us, we have our own personal passions, especially majority of us are busy working in our current job. So how can we have a supplement or secondary income stream to help us to supplement our ever inflated prices, especially the things that we want to buy or love over time? So latest inflation rate is announced at 3 point something percent, but our beloved things that we have are getting more and more expensive nowadays. And I'm very thankful that Making Investment Work course is accredited by IBF because IBF stands for Institution of Banking and Finance. With IBF accreditation, it really marks and signifies that whatever I'm teaching is not just based on my personal experience, but it is also based on what professionals are using in the market. That's why we can get that accreditation. So rest be assured that whatever I'm training and teaching is not something that is only purely out of my personal experience, but it's something that a lot of professionals in the market understood, and have been practicing in the market itself. So that is a little bit of my Making Investment course. But I'm afraid that this year, we're coming to end of year, Making Investment course has already ended its registration for the whole year. And we will not be running any new Making Investment course for this year. But at the end of my session, I'm going to share with you that what is really available is also the 2-hour workshop that are created especially for during this year. The 2-hour workshop will also take some time to explain to you and also to help you to understand how this can help you with your investment journey itself. But before I'm able to start to share about more details on today's topic, I think it's important for me to go through some simple disclaimer and limitation. First of all, I always like to draw a lot of past performance figures so as to help every individual to understand the concept and understand the impact of this concept. And please do take note that past data may not be the best indication of future performance. And as far as possible, I also want to try to use as recent data as much as possible. And I think the most important thing is that we need to consider our own personal risk at every point in time when we want to make any investment decision. So whatever shared today may not be your best interest, because God has made us to be really, really different, and our risk level or risk threshold that we have in each individual will definitely be different. So before you want to make any investment decision after today's talk, please to take note to assess your own personal risk appetite, or even the best is that you discuss with your financial advisors or trading representative like me, discuss about it before you make any significant decision. And of course, most importantly for me, I has always been focusing in Singapore stock market. So later on, we'll be quoting some examples using the Singapore stock market prices itself. But of course, the same philosophy and concept can be used for other market. But I want to make sure that everyone must be familiar with the market before you make any investment decision. Lastly, I pride myself as an investor in the market. So definitely at all times, I will have invested position in the market. Probably will have invested position on the stock will discuss, use it as an example to discuss today. But please be assured that I'm not coming in to get people to speculate any particular stock, but I'm here to educate people on how to properly decide, to analyze, and to make the right decision before you enter into a particular company. Okay, so these are the disclaimers and limitations for today's talk, so that everyone will be aware, so that we will know what's the direction I'm heading towards for today. Now, the first thing I want to start off with today's talk is this. It is to my surprise that many participants, especially some of people who has been buying shares in the stock market, didn't really understand how the stock market works. It's important to know how the stock market works, so as to help us to understand what are the various components or factors that can cause the share price to go up and down. So that is the reason why I need to tackle this first question. How does the stock market work itself? So to tackle this small portion, actually I found a simple video clip which explained very well online. And I'm going to play this video clip to help you to understand a simplified version on how the stock market works. So let's sit back and enjoy this video clip before I come back to talk about why share prices goes up and down.
The numbers we see every business day can tell us important information about our economy. But where do they come from, and what do they mean? This is stock markets in plain English. Let's get started by talking about companies. There are two basic types. The first is called a private company. Ownership in these companies is private, which means it's not available to everyone. They're usually small to medium-sized, and there are a lot of them, from the bakery down the street to a local trucking company. Private companies are typically owned by an individual or a small group of people. Because ownership is limited, we won't worry about them. Our focus is on companies that offer ownership to everyone. These are called public companies. Here's how they work. Let's say Zipper Corp is a successful company that has big plans. It wants to expand and build a button factory, but it doesn't have enough money. Because it's a public company, Zipper Corp can divide part of the ownership of the company into thousands of pieces and sell them to people like Maya. These are company stock, also called shares. This way, Maya gets to own a small part of the company, and Zipper Corp can raise money for their new factory. Being a public company allows Zipper Corp to raise money from lots of new owners like Maya. Now, Maya's share of the company has a value that typically changes each business day. When Zipper Corp is doing well, the future of the company can look promising. This means that the value of the company and the value of her shares may go up. People like Maya buy shares because they can make money by selling them at the right time. The big idea is to buy shares at a low price and sell them at a higher price. Of course, this is risky because a company's future is hard to predict. For example, people who believe the button factory is a good move may want to buy Zipper Corp shares because they think the value will increase. People who believe the button factory is a bad idea may want to sell Zipper Corp shares because they think the value will decrease. This means the company's stock has both buyers and sellers. Each business day, shares change hands, depending on how people feel about the company's future value. Some days there's more buying, which can cause the stock price to rise. Some days there is more selling, which can cause the stock price to fall. This is true for each public company in the market. As people buy and sell shares, stock prices can change each day. It's these exchanges across thousands of companies and millions of people that make up a stock market.
All right. So I hope this short video clip will help you to understand what really is happening in the stock market. Whenever we buy a share from the stock market, we become the owner of the share of the company. Now, for example, I own Singtel. If I walk to Singtel shop with my friends, I will tell my friends, hey, you see, I'm a owner of Singtel. They will all just laugh. Wow, Jay, you're very rich. You can own Singtel itself. I said, no need. I just only have 1,000 shares. I'm just a small shareholder in company. Or even bigger, the biggest company in Singapore, DBS. Sometimes when I walk past the DBS bank, I say, hey, you see, my business, you see so many people queuing up at DBS bank. Oh, you see my business is going to be very good. And all my friends also laugh again. So, being a shareholder, it gives us, and it makes us being an owner of the company. But think about it. Before we want to own a company, what do we expect? We expect and also hope that the company in future is going to make money to become more profitable. Why? Because if the company continue to be profitable, in future, the value of the company is going to increase. So when we ever buy a company, we need to first understand what company are we buying first. What is the share that we are buying? So very often, a lot of people just based on what they know, how Singtel, I know Singtel, a lot of people have handphone, surely have handphone and so on and so forth. They will just buy basically based on this kind of idea. Or even DBS, wow, interest rate go up, DBS is going to do well, but they're going to buy all this. But is this sufficient? Is this enough for us to know the share price will go up and down? Very often, it will turn out to be a disappointment for the person who make decision like that. And when it turns out to be a disappointment, sometimes when we decide that, okay, I want to sell the share, you see the share price, sometimes it can go up, it can be profit, suddenly it turn into losses. Why? It's because share prices are always measured by the market sentiment or measured by how the market believe that this company's future is going to be like. So with this understanding and with this background, the understanding that when we buy shares, we are actually owner of the company in hope that the company will continue to make money. This will help you to understand how does the market price a share. So let me go in deeper and help you to understand how the market really price a share itself. Now, to price a share, it involves two components. And the two components are as follows. The intrinsic value of the company and also the market sentiment of the company itself. These two components will constitute and give the price of the share itself. Now, so what's intrinsic value? Intrinsic value is something that is quantifiable through the reports of the company. Like for example, how much asset DBS have, how much the company of DBS earn, and through all these reports or financial statement of the company, we can use the reported value or numbers to quantify them. And through the quantification method, you'll be able to understand not only just the present value of company, but also the future value of the company. So the attempt for us to find all these numbers and evaluate them, analyze them, we call it fundamental analysis. So fundamental analysis is an attempt to understand the value of the company in order to help us to decide, make decision on whether the company is it worth to invest or not worth to invest in. So fundamental analysis is a quantifiable method to quantify things. So intrinsic value must be quantifiable. However, the stock market is not so straightforward. Why? Because there is a portion where we can't really quantify, which is the future of company. How can I be sure that in future DBS is going to continue to earn such amount of profit in future? Probably it may be hit by some setbacks like the recent incident of the internet banking cannot be used and so on and so forth. Are all these predictable? No, it's not predictable. So there is an unpredictable element which can only be measured by the market sentiment. So market sentiment is something that is really, really unquantifiable. Market sentiment is where buyers and sellers, how do they believe or how do they feel? Probably after the announcement or after the internet banking disruption happened in 1 or 2 weeks ago, the market participants will start to think, like that DBS seems to be facing some issue, and most likely may get fined for MAS and stuff. This can impact on their earnings. So therefore, I think the share price shouldn't be worth this amount right now. There will be impact on the share price in future. But all these are guessing work. All these are make believe that they believe that there will be impact on the intrinsic value of the company in future. But there will also be a group of sellers who buyers who will think, hey, but I think the price right now can be a good opportunity. Such crisis can be a good opportunity for me to buy into a good company of value. Since the price has dropped, it's a good chance to buy into it. So this is a component that a lot of people are always trying to find out what is the real sentiment of market. But generally speaking, something that is unquantifiable, it really creates a lot of volatility in the market, a lot of speculations, and therefore, the only best way to analyze such unquantified things that is happening is what we call technical analysis. Even though things are unquantifiable, we still can identify a pattern. Why? Because when human operates as a large scale, it will operate in a certain form of patterns. So technical analysis is a study of the market sentiment by making use of repeated patterns to help us to anticipate based on repeated patterns what will likely to happen in the future itself. So it's not really studying the company that you want to invest in. It's actually studying human patterns, human behaviors through patterns of the price. How price move up and down, and it move up and down, it can create predictable patterns. So pricing a share can be complex, but I hope that breaking down into these two components can help you to understand that this complexity can be simplified, can be broken down so that it will be simplified for us to understand the various portion of evaluation that is needed. So to make it more realistic, that is not just only theoretical, these two portions, but what really cause a share price to change can have multiple reasoning, multiple factors. For example, if the share price goes up like what we see today, the market is going up a little bit up, what are the various possibilities based on these two components? First, it could be because of the intrinsic value of the company increases, or it could be because of the market sentiment got better. Like for example, today, DBS, this morning I was reading a newspaper. The newspaper said that, hey, the banking sector in Q3, third quarter, may not perform as well as what we expected. But however, today the market share price goes up for DBS. So what is it telling us? Is it the performance of company that is not doing well is causing the share price to go up, which is the intrinsic value, or is it the market sentiment is causing the share price go up? So to me, my obvious interpretation today is that today the share price of DBS go up is most likely due to the market sentiment. Of course, it can be both. Intrinsic value goes up and also market sentiment go up. Okay, so these are the two or three possibilities. So vice versa, when the share price goes down, it can be due to the decrease in intrinsic value, or it can be due to the bearish sentiment that the market has encountered. But generally speaking, what usually every day share prices goes up, one of the most frequently happening things that happen is due to the market sentiment. Okay, so therefore, for people who trade in the market, who want to make price differences very quickly, very often you will see them evaluating and analyzing the price movement of the company, meaning analyzing the market sentiment. But I think end of the day, what is less volatile is actually the intrinsic value of company. What we really want to invest as an investor is that I want to buy into a company that is profitable and can be long lasting and can deliver value to me in the future with certain level of confidence. Okay, so that is the few different perspective, and I hope through this illustration you help you to break down the complexity about how share prices go up and down. It can be broken down into less complex for kind of understanding, so that we can break down to understand further. So the first thing I want to help everyone to understand further is to let's look at the component of intrinsic value. I want to help you to understand how intrinsic value is like and how can we get the intrinsic value of the company. So first of all, what consists of an intrinsic value of the company? So intrinsic value consists of two things. First, the book value of company, which measure the value of company if the company decided to close down today. And this book value can be very easily identified through financial reports, which later on I will show you how easy it is to get a company's book value. However, what is tougher to identify is the future value of company. Why? Why there's a component of future value? Why don't we just look at book value of the company will do? Now, the assumption of book value of the company is assume that if the company closed down today, how much money can we get back as a shareholder? But do we desire as an investor that the company will close down today? I think most probably not. Why? Because when we invest in a company, we hope the company will continue to perform. Perform what? Perform their business so as to achieve a profit for us in the future. So when company make profit, the value of the company will continue to grow and grow. But when we talk about value of company, we do not just hope that the company will grow and grow. How do we benefit as a shareholder every day or every moment? So companies will always reward the shareholder with dividends. So when they make money, they want to share the part of their profit with the shareholders to reward them for staying on with the company. So the way to do it is that they will pay dividends. Okay, so therefore, as a shareholder or as an potential investor or company, it is also an important factor for us to understand the earning capability of the company in the future, not just the earning capability of company in the future, but also the capability of the company paying us as an investor or the shareholder, whether they are capable in paying us dividend. Because whatever money we invested in the company, we definitely have expectation. We expect that whatever money we invested in, we will get a return from it. Why? Because our every $1 of money we have is an opportunity cost if you invest into a company. If I invest in this company, it's an opportunity cost for me. I want to be rewarded for taking up the opportunity cost. So future valuation is another milestone in fundamental analysis, which we can use various type of valuation models to help us to identify the future value of the company. So in short, intrinsic value is about identifying both the book value of the company and the future value of the company. So in the market, there are really different forms of valuation models that are available. Each model has its complexity into it. But today, I'm going to share with you some of the most frequently used valuation model in the market. First, the most common one is what we call the DCF model, or in the longer form, we call it the discounted cash flow model, by discounting the future cash flow of a company in order to derive a value to today. Or we can also use the dividend growth model, or some people know it as the Gordon growth model, to help us to value a company assuming perpetuity in the company itself. Or the first person who talked about intrinsic value of a company is actually Benjamin Graham. So Benjamin Graham has also designed a formula to calculate the potential value of a company in future. And the student or the disciple of Benjamin Graham is none other than Mr. Warren Buffett himself. So Mr. Warren Buffett also has his valuation model to help him to decide what are the companies to invest in his trust fund. So there are really different types of valuation models that is out in the market. Each has its advantages. They have their pro, their con. But what is more important is to understand all these various valuation models and to understand how to make best use of it at different kind of business situation. Okay. So the attempt to understand all this at the end of the day is to help us to understand this particular thing. The difference between intrinsic value and the market sentiment. But before I want to talk deeper into this comparison between valuation of the company with intrinsic value, I want to talk about the intersection. Do you realize that when I draw these two circles, they are intersected with each other? The intrinsic value and the market sentiment have an intersect. The intersect portion is actually the future value portion. The main setback of all the valuation model is that they are making assumptions that the company earnings or even dividend payout of the companies in future is going to be consistent. But in the real world situation, there are many factors that can affect the inconsistency of the value of the company, of the future value of company. This inconsistency is created by macro factors, like for example, the economic situation, or even inflation, like now we are facing high inflation rate environment, which also the subset of it is actually the high interest rate environment to control the inflation. And it can be also industrial confidence, like currently there's a semiconductor shortfall, and that's why a lot of semiconductor companies seems to be stuck at a certain level, causing the performance of semiconductor companies to be not performing well this year. Or even the consumer confidence, they're not confident about the perspective of this particular product for in future and so on and so forth. And what encompasses and can affect all these macro factors can be also the political situation. So nevertheless, it's not just important to just study the intrinsic value of company. It's also equally important to understand the market sentiment portion of the evaluation. Okay, why I want to state this is because in the market, a lot of people say, oh no, I'm a pure fundamentalist. I want to purely study fundamental value of company. However, they will not they did not realize that actually it's also important to understand the market sentiment portion also, meaning to understand technical analysis portion. Why? Because of this. Because if we study intrinsic value, the way that it's going to price a company will be more stable, yes. It will gradually increase over time. However, the real movement of the market is not like that. The real movement of the market, it will swing up and down because of market sentiment, because of speculation on the prospect of the company, or probably in the prospect of macro factors. So with understanding of intrinsic valuation, we will be able to help us to understand the different market situation. Like for example, situations where the market has overvalued the company, meaning the share price of the market is trading higher than the intrinsic value. When that happens, this trigger us that you should not be looking to buy. Instead, we should be looking to take profit of the market itself. But when the share price is below, the market sentiment is a situation of undervalue. So when you understand intrinsic value, we can use it to understand the market sentiment to help us to decide when it is overvalued and when it is undervalued. So if it's undervalued, then we can decide to buy into a company. When it's overvalued, we can decide to sell the company. However, this does not tell us when is the best time to buy and sell. And that is why we need to understand the market sentiment to help us to identify when's the best time to buy and sell. Okay, so before I talk about the next topic on the market sentiment, I would like to spend some time to do some demonstration. Like what I shared earlier on and what I promised you earlier on is that how do we just understand and identify the book value of the company very simply. So in in my making investment course or even in the 2-hour workshop that I'm going to introduce to you, we are going to use a platform, okay, to find information. We need to find all this information, and all this information are also easily available. One of the best platform that I want to use to find the information that is for free, that I no need to pay any single cent, is actually Poems itself. Okay, Poems, which I represent the company, has a very robust trading platform where you can find information that's really very useful for us to evaluate a company in terms of intrinsic value. So let me log in, then introduce to you how to find the value. You can actually opt in to have a demo account, okay, to try out first, or you can even sign up an account. Signing up an account, no need to pay any fee, no need to deposit any money, okay? So once you have the platform or Poems platform, you can actually make use of platform to find fundamental values. Let me show you how to find fundamental values. Okay, let me use DBS as an example, since I've been quoting it as an example. Okay, so to find the fundamental value of company for DBS, what you need to do is that you put your cursor on the name DBS and right click on the company. So when you right click on company, you will list down a list of things for you to select. Okay, so what we need to select is actually the stock analytics, where you can left click on it. Once you left click, it will pop up another window, okay, another screen for you to see the whole fundamental value of the company that has been retrieved. Now, I don't have time to explore and teach you to look into all the details, because in my making investment course, that's where I'll zoom in and teach more into detail how to read the values and things of this stock analytics itself. But in today's session, I just want to pinpoint the book value of DBS itself. Okay, so for the book value of DBS, to find it, very simple, look under the category of basic stock information. Okay, then look under the subcategory of valuation. So under valuation, you can look at this word, book value per share, very easily. Okay, very easily. So what's the book value per share? Book value per share means that if today company closed down and is able to pay back all the debts, return the money back to the debtors, whatever, and also able to sell 100% of what asset they have, the remainder will be distributed back to the shareholders. So per share, the price of per share of a book value of a company is $21.18. $21.18. So if I buy DBS today, and if DBS today close out company and sell everything, I'll get back $21.18. Then of course you say, hey, but Jay, wait a minute. The last traded price of DBS is at $33.01. So if I buy $33 today, then DBS today closed down at $21, means that I'm going to lose money now. Okay, and then why the market price DBS is $33 then? Why are people still interested to buy DBS at $33? In fact, today it went slightly higher than $33. Why? Why is it worth it when the company is only $21? Okay, so there is a price difference of $12. So this $12 is the component of the future value. Why? Because in future, I believe that DBS is able to continue to make a profit. So when it continue to make a profit, there is a potential that in future, the book value of DBS is not just $21. It can be higher than $21. Based on the present price, present value of company, the market could have priced the company at $33. So meaning the company may not be overvalued right now. Okay, it could possibly be even undervalued. How do we know that? That's where the calculation, the valuation models to calculate the future value of company will then come in. Okay, so this is what I normally do in my workshop, in my class. You'll see that I'll explain slowly into details where to click and stuff for all the participant course. Okay, so that is one of the most positive feedback, the strength of the way Jay is teaching. So I would also like to introduce to you one of my modular workshop, like what Andy has shared earlier on. The 2-hour workshop, modular workshop, is called Finding the Intrinsic Value of Company. Okay, so this is a subset, this is an add-on out of the Making Investment Work course itself. Okay, why I want to do this is because Making Investment Work course will build the foundation to understand intrinsic valuation. But if you haven't attended Making Investment course, it's also fine, because this is going to supplement and also to be a stepping stone to help you to understand the bigger foundation of the Making Investment Work course itself. So it will be happening on this 7th December on a Thursday night over Zoom, like how we experience over Zoom right now at 7:30 to 9:30 p.m. Okay, so we will provide you with the training materials, okay, via e-copy of my course notes. Okay, it will be an e-copy form. So what I'm going to learn is all the various valuation models, how it work, and the concept of whole valuation model. But what is more important that I always like to emphasize in all my courses and workshops is this: I want to make sure that it's practical. Okay, it's not just a session for you to listen, learn as a theory. I want people to hands-on. So there will be a live hands-on, live practical session. And to aid the practical session to be more fruitful, I'll always design some worksheet for you to hands-on. Okay, so in this intrinsic valuation workshop, I'll provide you Excel spreadsheet. Okay, and I especially designed this Excel spreadsheet for you to punch in real life number. So after punching in all the real life number, learning how to retrieve the real life number, you will very quickly to get an intrinsic value of a company. And this is going to be a powerful tool for you to help you to decide whether this company is it worth to invest or not. Okay, so all these are provided for you, all given to you. Why? Because I want to equip every individual who attended my workshop the right tools, and instead of trying to figure out and do their own Excel spreadsheet right now in this particular intrinsic value course, I have created it. Why not I just share with everyone? Okay, so that if you're interested in this, you can actually scan this QR code to sign up for this intrinsic value course. But of course, today my session, it doesn't end here, because just now I talked about intrinsic value as one component of pricing a share, but there's also another component of market sentiment. But before I move on, I would like to take a short water break, okay, to hydrate my throat before I move in to talk about the market sentiment portion. But in the meantime, if you have any questions that you want to ask, please feel free to use the Q&A function in this Zoom meeting to ask me questions, and I will spend some time to answer your questions before I move on to the next topic of the day. Okay? Okay, so I didn't receive any question, which means I assume that whatever I just now share is something that is easy for you to understand. Okay, you have already understood what I talked about and understood the whole concept of intrinsic value. Okay, but if you have still any burning question, please feel free to ask. Okay, question, Jay, what's your view in investing in S-REIT? Okay, I cannot answer particularly as a whole, but based on my personal opinion, okay, based on personal understanding, because when you talk about intrinsic value, different REITs in a company has their different intrinsic valuation. It's impossible for me to cover everything, but I can only talk about general sense. Okay, general sense recently, from generally what I have been analyzing is that a lot of REITs, their earnings are not showing good high earnings. Okay, they are making money. A lot, majority of them, they are profitable. Okay, there are some improvement in numbers. However, they have been affected. Some not all. Some have been affected by the high interest rate environment. So to me, to really understand the potential of S-REIT, I think there are a lot of good S-REIT, like in the early video clip talk about the data centers and stuff. Please do look at their earnings, also look at their dividend payout. Okay. End of the day, it's not just the sentiment of the whole REIT sentiment, but it's about understanding of individual REITs. Because REITs itself, we can break down into different sectors on it. Okay, and different sectors has its own different sentiment. But if you talk about S-REIT as a whole, recently people are starting to talk about the valuation of S-REIT now are on the lower side. Okay, but when the lower side doesn't mean that, hey, oh, I see this REIT, I want to buy straight away. No, no, okay. We still need to analyze individual company eventually, whether their earnings is going, the debt level is going to affect the earnings, and also whether their price right now is pricing overvalue or undervalue. As an individual level, don't use as a general sense. Okay, but I can share the general sense that people are talking about right now is that majority of people are seeing that, hey, it's time to look at REITs. That's why I believe that's the reason why you're asking this question also. Okay, I can say that there are companies that we can evaluate individually, that possibility that can be undervalued. But there are a lot of companies in S-REIT, they can be burdened by the debt level. Why? Because of the increase of interest rate environment. Okay, so we need to be very careful in terms of evaluating every individual S-REIT. That's my personal comment. Okay, so I hope I answer a question. Yeah, I cannot tell you the particular company because this will constitute an advice already. Okay. Okay, so let's move on. Now, the second component of pricing a company, okay, a company to potentially invest in, is also to the market sentiment portion. So what I'm going to do now is that I want to help you to understand the portion of market sentiment, which actually happen the most frequently. Market sentiment can affect the market price most frequently. Okay. So it's important to understand the market sentiment. Why? Just now we talked about intrinsic value and also the market price. With the understanding of intrinsic value, we can understand when the market price is overvalued or undervalued. However, at that very moment in time, when we see the market is overvalued, how do we know when's the best time to sell? And if I see the market is undervalued, how do I know when is the best time to buy? Because very often, the practitioner of fundamental analysis, when they start to see, hey, now the share price is overvalued, and when we see the share price of the market of the company is overvalued, they have a tendency to sell too early, meaning they see overvalue, they sell. Sell already, the share price keep on going higher. I said, hey, actually I could have sell at a much higher price to make more profit, but I sold too early. On the contrary, vice versa, when we see the company goes slightly undervalued, still really buy it. But lo to behold, or horror, the share price actually continue to go much lower. I could have bought the share at a much cheaper level. And not only bought at cheaper level, when the share price goes lower, I start to be more and more fearful that the company or whatever I evaluate in the intrinsic value can be wrong. And this can lead us to prematurely cut loss also. So that's why it's important to have the portion of market sentiment. It's important to also understand technical analysis to help us to time the market. Because fundamental analysis, one of the cons, the setback, is that it does not properly tell you when to buy and when to sell. It only tell you, oh, now overvalued, now undervalued. So therefore, we have to understand what is market sentiment. So when we talk about market sentiment, the foundation of market sentiment is this. We need to understand what is called bullish sentiment and what is called bearish sentiment. And these are technical terms that we very commonly use in the market. okay, analysts will actually use this term, wow, the market now is bullish, to describe the sentiment. Why do we want to use this word bullish and why do we want to use this word bearish? And how do we decide when the market is bullish, when the market is bearish? What's actually going on behind? A lot of people didn't understand this. They just, oh, because this is a technical term, it's like this. But today, I'm going to help you to understand and help you to understand this one little word, bullish and bearish. There are a lot of things going on behind. Okay? To explain that, first of all, bullish and bearish sentiment is talking about market participant. How do they feel? How do they believe? So when you talk about market participant, it can be you and me. But you and me, our intention can be different. I have intention to buy. I also have intention to sell. So within the market participant, it can be broken down into two groups of people. People who think of buying and people who think of selling. So with this understanding of market participant, then I will use this to explain to you how come market sentiment can cause the share price to go up and also cause the share price to go down, and who are causing the share price to go up and down. Okay, so let's start off with bullish sentiment. So in the bullish sentiment, it's actually a description to describe the market participant are thinking that this particular business or this company has future potential. They believe that in future, the company profit is going to increase. So they are into this belief. When we talk about bullish sentiment, that means people are market participants are believing that this company's value is going to increase in future. Not share price. I'm talking about the intrinsic value of the company. So when they believe, what will happen to the group of buyers? What will the buyers be thinking? The buyers will be thinking this way. The buyers at that moment in time, since the company are thinking that it's going to be performing well in future, they will be willing to buy at a higher price. Okay? If the company future is good, they'll be willing to pay and buy the share at a higher price. Why? Because if I still keep on demanding the price to be a lower side, I may not be able to buy the share. Okay, so they are willing. The keyword is willing to pay a higher price. Since it's so good, then you definitely, how expensive it is, I also want ma. So the other group, the sellers, they will also have the same information. They have the same information as the buyers. So this time around, the sellers, since they know that they believe that the company is going to do well in future, do you think they will want to sell a lower price? Do you think they want to sell the share in the first place? Hey, the company I know in future is going to do well, the intrinsic value is going to increase. I have no incentive to sell. I might as well hold on this company for the future. But however, if someone offer to buy from me at a higher price, I'll be willing to sell. This also means that seller at this point in time, they expect, when they sell, they expect to receive a higher price. So when buyers are willing to pay a higher price and seller are expecting to sell a higher price, this naturally will cause the share price to be higher and higher and higher going forward. So the main factor that can cause a share price to go up, it could be the intrinsic value. But when you talk about sentiment, the sentiment is that suddenly the market participant believe that this company is going to perform better in future. Okay, so this is based on the bullish sentiment. That means the belief is positive. They think the company can do better in future. But there will be one point in time. There will be one point in time, the belief will switch. Why? Because as the price goes higher over time, the buyers will start to think, hey, now the price seems to be a bit more expensive. The intrinsic value of company now is much lower than the market share price. So meaning it's overvalued already. So when it's overvalued, will the buyers continue to be willing to pay a higher price? When the buyers are not willing to pay a higher price, what will happen to the sellers? The sellers do they continue to expect? They will start to realize, hey, I cannot expect to sell a higher price anymore. So meaning at a bearish sentiment, there will be a reversal point where the sentiment start to change from bullish sentiment to bearish sentiment. The market participant perspective and belief also start to change. Change to what? For the buyers group, when the bearish sentiment comes in, the buyers now think that, hey, since the company is not doing well, the share price is going to go lower, what for I pay a higher price? I only will be willing to pay a lower price. You must give me a lower price that I want to buy. So there is an expectation over here right now in the bearish sentiment. I expect to pay a lower price. If you don't give me lower price, I don't buy. It's okay. Because I believe I can get a much lower price later on. So when that happens, those sellers which also have the same sentiment, same feeling, now I cannot sell a higher price. If I don't sell right now, the share price is going to go lower and lower. So they are now very willing to receive a lower price right now. So you see the contrast, the bullish sentiment contrast with the bearish sentiment. It's all based on belief. Belief whether this company's value in future is going to get better or get worse off. And this belief, everybody will feel it, everybody will have the same understanding. So when everybody has the same understanding, this can cause the share price to either go up or down itself. So that is the foundation of market sentiment. It's about identifying the bullish and bearish sentiment. So how do we identify bullish and bearish sentiment? How do we be ahead or to understand the real market sentiment? Because sometimes we see the share price and stuff, a lot of times we just based on our own personal feeling, but it's not, market is not based on personal feeling, it's based on hundreds or thousands or millions of market participants to develop the overall sentiment. So how to measure that? How do we know that? That's where technical analysis have to come in. The foundation of technical analysis is what we call the classical technical analysis. Classical technical analysis is an attempt to study the price of the company to find patterns. So the study can include trend analysis to identify whether the market is trending upwards or trending downwards. So when you trend upwards, there is a certain pattern. When you trend downwards, there is a certain pattern. And when these patterns form, it can also form what we call the support and resistance levels. And the importance of support and resistance level is that it will give us price level for us to watch out the likelihood of the pattern can happen. And of course, some people find it important to help us to establish what price to buy and what price to sell. But to fully understand the trend and also the support and resistance patterns, that's where volume also plays a part in the market sentiment. Are a lot of people excited about this company? Are they participating in the increment of share price over time? So volume analysis has to come in. So classical analysis is encompassed to evaluate these three major things. And this set the firmest and strongest foundation for technical analysis. But over time, with design or computing and also computing over time, and also with understanding of more mathematical formulas over time, technical indicators is then developed. Okay, is then developed. The purpose of technical indicators is to simplify the patterns that has happened over time to help us to recognize the pattern much more easier. Okay, so in my arsenal of technical indicators that I want to teach and educate market participants are these three. The most basic technical indicators that we can use is actually the moving average indicator, which will be taught in the making investment course itself. But there are more advanced technical indicator which is available, which are MACD indicator, or even a much more advanced indicator is the Ichimoku cloud indicator. So there are really other technical indicators that are available, but importantly, end of the day, they are just the tip of the iceberg. The main foundation is still the classical technical analysis foundation. So eventually, how does this going to relate the intrinsic valuation with the market sentiment evaluation together? We want to use technical analysis as a tool to help us to time the market. Time the market, when is the best timing to buy? When is the best timing to sell? That's where we need to understand the theory of reversal. In theory of reversal, we have been looking into two types of reversal, bullish reversal and bearish reversal. What's a bullish reversal? Bullish reversal is that when the market is having downtrend, having bearish sentiment, share prices keep on dropping lower and lower. I want to find the point in time that the sentiment switch from bearish sentiment switch to bullish sentiment. Why? Because if I know that the sentiment has switched, I may not have buy at the lowest point, but when it switch, I know that in future the price is going to go higher. So this means that this will become the best buying point for me. It's not the lowest point. Why? Because when the lowest point can go lower in future. But I want to be assured that sentiment has changed from bearish sentiment to bullish sentiment. So when it's bullish sentiment, then I will be assured that in future, the price of this share is going to go higher. So when I buy, I want to buy during a bullish reversal situation. Vice versa, in a bearish reversal situation, is this. Market has been going higher and higher, bullish sentiment. The price has been getting higher and higher. However, there will be a point in time that market participants find that the market price is on the too high of the side, especially the buyers. Then they will start to stop buying. Then suddenly the sellers realize, hey, actually I cannot expect to sell a higher price anymore. So they will be willing to sell a lower price. This will cause the bearish reversal point, and then this can trigger off a bearish sentiment going forward. So when this happens, it can help us to decide to sell into the market. Okay, so do you see technical analysis relationship is always like a vice versa kind of relationship, a bullish sentiment, bullish relationship with the bearish relationship. And ultimately, the purpose is to help us to time and decide when to buy and when to sell. Okay, so this is both the bullish and bearish reversal. Then how does the technical indicators simplify the whole process of identifying patterns? And how does it trigger and tell us when is the time to watch out for reversal patterns? When is the time to buy and sell? So I'm going to give you a quick demonstration understanding how Ichimoku cloud indicator can help you, and also how MACD indicator can help you to identify all this. Okay, so over here I have a chart of DBS with the Ichimoku cloud indicator. Okay, So I remember in late last year to early this year, it actually triggered very, very good technical indications. Okay. First of all, it has indicated earlier on during July last year that the trend of DBS is reversing, is warning. So when it's warning reversing, if I haven't buy any DBS, I will start to watch out for the trigger point. So it later on also confirmed the reversal point. That means confirm that the point that the trend of Ichimoku is no longer bearish, it's changing to bullish sentiment. So I make use of this reversal warning and a reversal confirmation to make buying decision. Okay. So first trigger point, I buy a little bit of position. Oh, maybe correct. I try. Then when there's confirmation, then I will establish the second entry point. Then over time, okay, as DBS start to hit $36, based on the Ichimoku cloud, it start to indicate that there is a warning, there is a possible reversal point. So when it's a possible reversal point, I can consider to take some profit. But when there's confirmation, okay, when there's confirmation of reversal, I can exit the market to make the price difference itself. Okay, but of course, for me personally, I do not sell everything. There will be all these are short-term kind of position sizings that we can make use of for technical indication. So Ichimoku count can definitely improve your technical analysis. Okay, it may not be 100% all the time, but it can be a good tool to add into the arsenal of understanding classical technical analysis. This Ichimoku course will be happening on the 14th December, 1 week after intrinsic value class on Thursday night, same time 7:30 to 9:30 p.m. But what is more important over here, not just understanding on the Ichimoku cloud, how it works, how to read it, but I always emphasize that we need to learn things practically. So for me, I especially created a Ichimoku cloud evaluation scoring sheet, scoring form. Okay, a step-by-step process to guide you through what are the things to look out for, then eventually how do we strategize using this Ichimoku cloud indicator to add onto our technical analysis. Okay, so there will be practice, practical. Also same thing. There will be a e-notes for you, and e-notes for you. You can actually print out the practical worksheet for you to practice hands-on during the live session. In the session itself. Okay, so this is a separate QR code to sign up for the Ichimoku cloud indicator. But nevertheless, one indicator may not be enough. Okay, you may also want to explore to see maybe MACD technical indicator is more suitable for you, because Ichimoku cloud, wow, there's a lot of lines and stuff. It can be complex for some people. So the next alternative, which is also an alternative where a lot of professionals in the market is using, a lot of them find it very, very easy to use and also intuitive. Okay, to help with trigger signal, this MACD indicator can also complement with the Ichimoku cloud indicator. Okay, so over here, same period in DBS, the MACD indicator can have early indication, but early indication can have its setback. Okay, however, in this case, you see the MACD trigger in the month of June. There is a possible reversal in the month of June for DBS, but it's a bit too early. But affirmation only comes during July, okay, which is also earlier than the Ichimoku cloud. But to really trigger off when to buy is using the histogram, MACD histogram, to trigger off to buy. Then you realize actually it's about the same time as the Ichimoku cloud indicator, no much difference. Okay, when you will trigger off the buy. So this MACD indicators, once you understand, hey, actually there's a lot of usage that can help you to identify not only just trend, but also entry and exit opportunity. So in the same fashion, it can also trigger warning that the trend is changing And there's also affirmation where the trend is changing, where you can make decision to take profit and so on and so forth. So the alternative workshop that on MACD is also available for you, but it's going to be on the 21st December. Same thing, Thursday night. You see, I really set aside Thursday night to be running these courses. In the same fashion as Ichimoku Cloud, there will also be worksheets for you to work on to understand where MACD is at, for you to evaluate and to establish your trading strategy. So this is another separate QR code for you to understand our MACD and also to sign up for MACD itself. So you see, eventually, there are a lot of methodologies, a lot of strategies that we can adopt to evaluate a single company. But end of the day, to really fully understand the full picture of share prices, you realize that we really need to we have to spend time to evaluate and analyze every single company. And we are able to analyze this single company, then we can make wiser decision to help us to make our investment work for us. Okay, so making investment cost is an overall cost to help you to set the right foundation and mindset to get into a more higher level to decide your investment perspective, to decide investment decision, and even to pull trigger. So this year, like I shared earlier on, making investment costs, we have ended a run for this year, 2023. But I also want to announce that in 2024, I have also planned the dates and also intended to have making investment costs to be running in 2023. So for now, I haven't formally finalized everything. Probably next month I'll finalize. It will be happening in likely to be on 2024 January of 2024. Okay, probably it's late January itself. So when the dates are up, when I have further affirmation of the dates, I'll definitely announce to everyone. But as for now, what I explained of the 3 workshops that I have this year, it can have this as a head start to help you to prepare for making investment costs in the future, or and this will also give you a head start to be able to understand how to evaluate both the intrinsic value of company and also the market sentiment of the company. So I created these 3 comprehensive workshops to help you to reach that level. But the real heartbeat of this 2-hour workshop is the heartbeat to get every participant to practice and to fully understand how to use this tool to their advantage. But over my years of training in the market, I come to realize that sometimes we need some time to digest the information we learn. We need to practice a bit over time in order to understand some limitations of the particular tool we use. So that's where I want to offer my own personal time for all this series of making investment work 2-hour workshop. I want to also use my personal time as a bonus. For every sign up that you sign up, I'll offer myself to do private coaching on the particular topic to help you to fully understand. I will encourage you to use the tools that are available that I have created and given to every participant to use it, evaluate, discuss upon it, understand upon it, and derive a decision making with me next to you. So this is really my heartbeat in running all these 2-hour workshop or even the making investment course. My heartbeat is really to want to help you. Okay, so I have a question. Fundamental does not change short term, but sentiments. Are you advocating advocating technical analysis, which is against WB philosophy? WB, I'm not too sure what is WB lah. No, what I'm trying to say over here is this. Okay, what I'm trying to say over my today's session is this. To fully understand the price of share, it requires 2 portions. intrinsic value, and market sentiment. But to help us to fully make wise investment decision, we need both fundamental analysis and technical analysis. I don't weigh technical analysis to be better than fundamental analysis. Why? Because if I purely practice fundamental analysis, I may be buying into a company that the fundamentals or the intrinsic value, the market has been pricing the intrinsic value wrongly. Okay, since I'm talking about this, I also want to share with you my next month topic in the month of November is talking about why does my share continue to stay at a low. One of the fundamental problem why people buy shares and the share continue to be low is that they base on technical analysis only to invest in the share itself. So that's why they got stuck forever. Okay, because when sometimes market sentiment, when market speculate a particular stock, they may not speculate based on belief of the fundamental value of company. They base on belief that this company in future have a strong foundation, which they may not have really built a strong fundamental foundation. Okay, so you must have both. For me, I strongly advocate and believe that we must have both fundamental analysis and technical analysis to complement each other, not to confuse each other, but I want to help everybody to realize that actually it complements. Okay, it's not confusing one. So that's why we have to break down all these things in a smaller portion itself. Okay. Now you see another habit of mine is that I don't want to run course online. Like what Andy has shared over the COVID times, I have a lot of participants signing up for my making investment course and learning things online. But sad to say, over time I realized that not everybody are practicing, not everybody are fully understand things. So I want to really put my time physically to encourage people to practice what they learn. So I also want to kickstart a situation where everybody are getting more comfortable with physical in-person situation. So next month, Cybercode and me, we have designed one very special in-person preview. We have been very comfortable listening to things online for the past 3 years. But there's advantage of meeting in person. So that's why in November, on the 21st November, I have created, me and Cybercode, we have created an in-person preview to have a session to get you guys to come together and learn from me. And one of the very interesting things that I have created this year is not just a 2-hour workshop. I also have created a game to help everybody to understand their internal perspective of how you manage wealth. I created this game called Are You Wealthy? It's a physical card game. I want everybody to come down to enjoy the game together, not just enjoy the game, but also to understand the foundation of investment, what investment is about. But do you know that when we talk about investment, everybody have their own idea, they have their own behavior. And it's through this game, which I run in Thailand, I run in Singapore, I only have small focus group to try out my game. They give me a lot of feedback and say, Jay, wow, I didn't know I have this kind of attitude when it comes to investment and so on and so forth. So I want to encourage everyone to consider coming for this in-person preview session. Okay, it's not just listening over Zoom, but to consider to join us on this 21st November, 7:30 to 9:30 p.m. on Tuesday. To join us, to see me, not just online. You can see my real self. I actually, you'll see that I'm quite big size in a person on. Okay, online you see, hey, it looks good and stuff. Very different. Okay, so like what Andy has shared, I also want to encourage you to bring a friend. Okay, bring a friend to join us in this 21st November. And also because of the timing at 7:30 to 9:30 p.m., we also prepare some refreshment. Okay, out of our own pocket, we also want to help you for, because we also realize some people may be very busy with work, OT and stuff, no time to get a meal. So have some light refreshment, kind of enjoy the game together, play together, understand the foundation of investment philosophy, get it right, then you can make your investment work for you. Okay. So for now to sign up for making investment course, okay, is in suspense right now. But in the 2-hour workshop, this is a QR code for you to sign up. Later on, I will invite Andy in to explain, to share with you how to sign up for this 2-hour workshop and also how to sign up for this in-person session on the 21st November. Okay. Yes, the in-person on the 21st November is limited seats. What I heard just now, already 18 people sign up, then I only have 10 over seats left. Okay, because of the limited size in this long life learning institute training room. Okay, so we are limited seats because my card game I also have a limited amount and also need people to facilitate and stuff. Okay, so before I pass the time to Andy, I would like to thank everyone for staying with me for the past 1.5 hours. And I hope that whatever I share for you today will give you a very strong foundation and insight why share prices goes up and down. But most importantly, to fully understand how to make wise investment decision, it requires us to understand the intrinsic value portion and the market sentiment portion, which involve both fundamental analysis and technical analysis. It's not just about, wow, just like technical indicators, I see the share price go up, I sell, I make profit. No, it's not just about that. It must include the understanding and confidence that the company I invest in has a prospect to be able to survive for a long term, meaning it must be profitable. So all these have to come in together and not just the technical analysis portion that can make you excited. So with this, I thank you for your time, and I really hope everybody will not only see me in the in-person preview, but also to see me in the 2-hour workshop. With this, I thank you for your time and hope you'll be able to know how to make investment work for you. Thank you, everyone. Andy, please.
Hi, yes, Jay, can see me and hear me well?
Yes.
Okay, cool. Thank you very much, Jay. Well manager from Philips Security, also the IPM career trainer. Now, very exciting for this event, which is going to happening now. I think Jay did mention with all of you here. Well, I believe that as a training provider, I can actually give you the assurance that this is the only in-person preview session that after the COVID that we are providing for the general public to take part. So I think leveraging into this special moment on the 21st of November, as you can see on that, for those who would like to just join in, I think in the morning, I just further check with my marketing team, which I think Jay did also share with all you here. We already have about 18 packs already filled up. So because the room we book is actually up to maximum of 30, therefore I just sent a text to everyone, just send a message to everyone in the chat that we only left 10 more seats to go before we close up for registration. So please take the last, say maybe about 5-10 seconds to just register, and then the key thing, please bring along your friend, right? Because it's very exciting. It make it more interactive. You have a lot of games you can learn or even win prizes, right, during this 2-hour session, which is happening on the 21st of November, Tuesday, 7:30 p.m. to 9:30 p.m. And as what you understand some game involved, therefore we also provide some light refreshment will be available, right? So please do that, right? Because once you reach a maximum of 30 packs, we will close up for the registration for this event. Are you wealthy, right? Are you wealthy to play games, to learn, as well to win prizes? But importantly, today we would like to also share with all of you here is, I think what Jay did share with all you with is more than close to 17 of this financial experience to share with all of you here. Now, of course, we I think Jay did mention we run two different courses. The IBF courses we call making investment work course, right? And then as well as the 2-hour workshop, the three different subjects that we just shared with all of you here. Now, I think we're already moving to the in fact I would say close to end of the year, right? So end of the year, basically that most of us, we have less schedule in your work schedule. I think this is a perfect time, especially the three webinar, sorry, the three, what do you call it, this, the 2 hour workshop that we actually share with all of you here. It will be all in the month of December. Now, I think I really urge all of you to do that. Now, let me just do my share screen first because I need to share more detail with all of you here. Please stay tuned for those who would like to find out more, right? And then because definitely, like I say in the beginning of the opening speech, right, you can get a lot of things that basically you will stay tuned towards the end of session. Now, of course, the most important thing I think Jay did mention to all of you here. Now, as a wealth manager, I think he's been busy guy. I think he'll be helping his client to do this asset location and as well as managing his client on behalf. And therefore, with his vast knowledge in this field for the past 16 years, therefore, I think if you ask me, the one-on-one coaching session is one of the gist of the portion, the time that you can use it to maximize to I would say that to ask question that you have in mind that basically maybe you feel shy to ask in the general public because this physical one-on-one person is actually in we call it like a face-to-face session, and it that will be actually if you sign up for any of the three subjects, which is the finding the intrinsic value of the company, writing the Ichikobuko Cloud indicator, or the using MACD to spot the market turning points, or even the making investment work course, although we haven't finalized the course date as yet. We will still encourage you to register, right? Because I think Jay already highlighted to all of you here. By next 1-2 weeks, basically he's going to send out a concrete dates and the time. But our setting of the class, I can just show to all of you here. For those who are keen to maybe to know more about the more comprehensive the course, right? Which is what you can see right now. Let me just put into full screen. Okay, so the setting of the class will work in such is like we break it into three parts, right, of the making investment work course. So part one will be involving about 2 weekday evening, 6:15 p.m. and around 10:15 p.m. And part two will be also 2 weekday evening. I think the 2 weekday evening will be in Monday evening and Thursday evening, right? So to be exact, Monday and Thursday evening. And then the timing will start from 6:15 p.m. to 10:15 p.m. And then part three will be the full day. That will be happening on the Saturday, and that will be start from morning at 9 a.m. to 6 p.m. So this will be the comprehensive session. Now over here you can see the pricing, right? I think we all aware about that. One of the things that is going to change for sure, right? What other thing, right? Is the goods and service tax, right? The GST for next year will be increased to 9%, no longer 8%. So over here, basically, you take it as a reference, right? Currently, the full cost fee is still 1,008. As of next year, perhaps we don't make any changes, but the goods and service tax, which is taxed by the government, that one we can't help, right? It could increase by 1 more%. I think another $10 to $12 more. So next year onwards, right, you can see here this will be the additional maybe $12 more or $12 more respectively, right? And the good thing is, as a citizen, as a citizen, you can even use your Skill Future credit to fund for it, which is I'm going to sign in with my personal Skill Future credit account to run through with all of you here. Now, of course, for those who join in via Facebook Live, I think my colleagues back end will also send the link for you to do the registration for either this IBF courses, the making investment work course, or the 2-hour workshop, three different subjects that we have just mentioned earlier on. You can click on the link. The two separate links has been sent into the comment column in the Facebook for those who view from Facebook Live. Now, for those who join in via Zoom, I just send the link over as well to everyone, so you can click on the respective link to do the registration. Now, of course, if you today you join in, you are NTUC member, right? I think you see as a training provider, we try all means, all way to help out the course participant. And so much so that you're going to approach the NTUC Corporation Limited to get this NTUC UTEP funding eligible, which is a very, I think, hard to come by that you have such a course that can both with the like local citizen, you can use the Skill Future credit or even the NTUC UTEP funding, right? I'll go through with all of you each individual in another maybe 3 to 5 minutes time. Okay, so allow me to do the run through with all of you for the Skill Future credit. I think there are quite a fair bit of you perhaps maybe you have not started using the Skill Future credit, so it's time for me also to take this opportunity to share with all of you here. In fact, the Skill Future credit is also come with the expiry date, which is a lot of citizens don't know. because citizenship is only for Singapore citizen only. So if you are PR, you still enjoy the 50% subsidy, so you can still use PayNow, PayLah, and online payment, right? So I believe quite most of you are local citizens. Joining for this session, you are able to use this skill future credit to fund for the remaining fee, which is the $1,044 with GST. Of course, it will not be exact fee lah. It will increase by I think about another 1% more lah. So it's another maybe $10 to $12 more. And then for citizen age 40 years and above, then your fee will be maybe slightly, maybe about $700 more, because we're talking about next year, January. It will be the year of the new GST involved, right? First Jan 2024 will be the 9% GST. Okay, so let me just go through with all you here on the, let me see. I'll go through the skill future first, right? So those who have some time, just bear with me. I'll just run through with you here. Now, for those who already got used to use sign in with SingPass to use SkillSfuture to make claim of courses, you can go ahead to do the registration, right? You can do the registration. So for registration, let's say for the MIW course, right? If let's say you don't have a date yet, you don't make any payment, but you can do the registration right now. So what you need to do is actually there's a two course registration link has been sent in the chat for everyone. You just click on the first link, the MIW link. Okay, I just click on the link, and then it will come to this page, right? Just to make sure that I have shared. Okay, cool. I have shared. Okay, so the course title is called MIW course registration form. Now, MIW is acronym for making investment work, right? So it's a full, the short form is MIW course registration form. So you can see here, I mean, of course, you can click on the select course. You can see no matches found because currently we have not finalized yet. But like I said, you still can do the registration. Just ignore the selection of course date. You just fill up those required field. There is a strict field. Please fill it up. Okay, and then you select the self-pay individual, and then you move all the way down. Of course, you want to know more detail, you can just read through for citizen below 40 years old and so on and so forth. You can see the detail. In fact, our cost fee of before the tax, before the goods and service tax is 1,008 of this making investment work cost. Now, in fact, this course itself brings some history to all of you for those who first time to get to know our cybercool courses. In fact, our making investment work course, we've been running easily. I think this year we'll be stepping into number 7 or 8 years already. I mean, during the maiden year when you start off of this running for this course of time, course participant could pay a full course fee. So it's just only during the COVID period, the government, and particularly in IBF, Institute of Finance, the video we played earlier on in the beginning speech, to just share you, they're coming in here to help out local citizens to upskill. Therefore, you only pay after the subsidy, right? Last time before we call it like before the COVID, right? You got to pay a full cost fee upfront. Okay. So here we'll do the explanation. I think maybe I don't go through it. It's quite lengthy. So you can just go through it for those who want to know more. And then just move it all the way down to the last payment methods. So we provide about 4 payment selection. So we have start with the Skill Future Credit. This is for local citizen. You can sign in with SingPass to do the claim. Now, of course, if you're joining as a permanent resident, you can use Visa, Master, PayNow, or PayLah to make payment. Let me just start with the Skill Future Credit first. So Skill Future Credit, I just select Skill Future. So this button is all review button. I can, by default, if you stay on the Skill Future Credit, and then I click here, you see beside there's the same password in required, I click here, and then in the next 10 maybe second, and then it will route to the landing page of the Skill Future page, right? So I want to show proof to you that our course is already pre-registered, approved by the Skill Future Singapore, right? As you can see, this is a landing page of the Skill Future landing page, and our course name, making investment work course, and you capture the full course name is all here, right? So what I need to do is just click on the e-services, right? And then there will be 5 boxes provided. So we click on the first box, check and claim Skill Future credit. So immediately it will pop up the what do you call it, this SingPass app. So this is the time you have to get ready with your mobile phone, right? So because you need to sign in with SingPass. So I think we all knew, right? For those who I think even now bank also practice this way already, for security reason. So now when you sign in, it's like most of the time you link to your SingPass, right? So you click on the tab of the SingPass, and then at the same time, make sure you get your smartphone beside you, and then you have to wait for the code come out, and then you go to scan the code. That's how I do. Okay, so I scan the code. So in another, yeah, use a Face ID, and then will be faster, right? And then the next 10 seconds, you route to my personal page. They run to my personal page, right? And you can see I'm going to showcase to you where they list the expiry date in the system, right? Now over here, you can see this is my personal page of my Skill Future page. Okay, as you can see in my top right corner, my name, Andy Tan, and I have my credit balance over here. Now earlier on, I did mention, right, which the Skill Future credit is set with the expiry. Actually, here will show lah, but it show a very small fine print. But you want to know a more detail, right? Beside the dollar that you have there in the system, there's a forward symbol. I click on the forward symbol. So once I click on the forward symbol, you break down all the dollars that you have. So currently, you break it into every $500 each. So if you're aged from 40 years and above, like my age and above, you get a total 1,005. So the first $500 at the moment, there isn't any uh if you so-called there isn't any expiry set as for this $500, right? The next $500, right? We call it like a one-off skill future credit. This will be going to be expire on 31st December 2025. And today we are starting into the 24th, right? We are 24th of October. So exactly, I think exactly 2 years, okay, about 2 year or 2 months only. Okay, so it's going to be expired by two year time. And then there's another additional skill future credit. There's a mid-career support, and this also going to expire on 31st December 2025. So it is a time that, I mean, like today is a lunch webinar session. You may have a lot of friends, Singaporean friends, they have skill future credit, they have not started using it, especially your friend actually were keen in the stock trading or investment. Now it's time for you to share with them about this information, right? So as for them to know that they need not to use their own personal money from the bank, from the wallet, from the purse to pay to join in for this making investment workforce, whereby they can use the government credit this given to the citizen, given to the local citizen. You can use this money to pay for it after the subsidy, after the 70% cost subsidy, after the 50% cost subsidy. Okay, so this is a very, very valid information. You can share as many as possible with your friends, you know, as I say, especially your friend who are in the finance field, right? Okay, now how to do the submit a class, the click, sorry, you can click on the submit a claim, and then right underneath there is a select a course, submit a claim. So this way I can key in the course name, I can key in the course name, right? So I key in making investment work course, right? So it will show to you, right? And then you see when I key in the second word will appear, I just select it. And under beside there's a tab, I click on the select tab, and then you should be able to see, yep, correct. I think just now pop up already. Of course, it will be appear. So it show to you it appear over here. I need to click on select, right? To select the course, right? So, and then you can key in the course start date, so and so forth. So, of course, skill future credit, like I said, you don't make any payment as yet because there isn't any cost date. But I can just do a simulation to showcase to all of you here. When let's say we already set up the date, let's say example, we already set up the date. Example, let's say we're going to start off our sessions on the 13th of November. We click next, right? You should be able to see this page up here. So on the left side, there's a cost detail, cost name, cost code. On the right side, there's a column that you got to fill up under the payment details, the amount of credit to claim, fee payable by you, including GST, and then you also got to upload the supporting documents. So where to get this information from? So earlier on, we did mention, right? So if you are, let me just open up this. So if you are fall under this tier, and you are under citizen below 40 years old, this is your cost fee payable, 1044. So if you're citizen age 40 years and above, this is your cost fee payable, 684. So let's say take for instance, I am above 40. So I key in 684, and I also key in the 684 on the other column under the fee payable by you, including GST. And then over here, I've got to submit the supporting document. It's a requirement set by the portal, right? By the government portal. So what you need to do, wait, sorry. Okay, yeah, you have to tick, yeah. So you have to make sure both columns need to be correct. If not, there will be a red words appear. And then over here, I need to provide the supporting document. So where do I get this form? So this is the form that we just mentioned. You click on the link over the chat we just sent to everyone, and then you just, of course, when you start off to submit already, let's say you've got the final date already, after 2-3 weeks later, we will change it under selection of course date. Then you can see the date here. Then you fill up all those details. But I find in here, you don't make any payment. You just do the uh uh provide your personal particulars. So you just ignore the selection of course date, and then you just fill up all those required field as per required by this printed in the asterisk, and then you just select SkillsFuture, you click on submit. So once you click on submit in your email, there will be an auto email sent to you with the course registration form. So the form itself, you can save it in your local drive. When you come to here, you can browse, you click on browse, and then let's say you save it under the form that you have already saved, right? Let's say this is the form that you have saved right in your local drive, and then you select it, and then you click it open, and it will be uploaded into here. Over here, you can straight away come out. Of course, your file will be in the PDF, in the PDF format. And then before you do a submission, you click on review to make sure all this information is in order, and if everything in order, and then you click on the term and condition to agree on term condition, and then you click on the submit button. So this is so simple for the SkillsFuture credit payment, which is you're using your same pass to log in, right? Okay. Now again, yeah, I need to sign out because this is my personal SkillsFuture credit account. Okay. Now, of course, we also provide another 3 payment types. We accept Visa, we accept PayNow, we also accept PayLah. So if you decided using Visa payment, you select Visa or Master, and you click here. So this will be much easier. So you route to our payment page backend, and over here you can see there is under the order information, you just click the courses. There's a drop down list, and then you go and select in the middle making investment work course. So currently you don't put any date yet, right? So you do make payment, like you do registration, but just to showcase to you that when you get the date, we will update it in our payment gateway system, and you can actually key in whether it's 684 or 1044, and then you key in the order node. This is optional. You can key in also, all right. You can just key in your detail, name, email, contact, mailing address, floor number, postal code, and then you click next. And the next page will appear with the page Visa card or Mastercard. You can choose either one to make payment. Okay, so this is actually for the Visa, Master, and accept. We also accept PayNow and PayLah. Of course, your PayNow you need to link to your local bank, right? So whether it's OCBC, UOB, DBS, or right, all the 4 local bank. Once you link up and then you sign in your online app, and then you click on the QR code to scan the PayNow code. Then you key in the company name, cyber code, cost name, MIW, or making investment work, and then cost fee payable, which is 684 or 1044. And then last but not least, you got to key in this UEN number. Okay, same apply for PayLah. So these are the course we're talking about is for this making investment work course. So we're also talking about the main gist of today's session is for the 2-hour workshop. So the 2-hour workshop for the signing up is pretty easy, as what I just mentioned to everyone, to all of you here. As you can see, the date is actually just 1 week after, right? I mean, then some people may start to have this question in mind. So Andy, what I see, the date seems that didn't crash, right? Can I attend all the 3 courses? And then people might start to ask, hey, Andy, since you told me that every course you sign, whether it's the MRW course or the 2-hour workshop, I will be eligible under the complimentary one-on-one face-to-face personal coaching session with chia, right? So let's say you sign up 3, if you decided to learn all the 3 unique classes, right? And the eligible for you is still 1, because yeah, I consider 1 because it's the same course you attend, right? Then of course, let's say you sign up for MRW course together with uh, this modular class, same thing, you'll be eligible for 1 personal coaching session. That is actually quite a very variable session, that 2-hour session. In fact, the one-on-one personal coaching, the face-to-face session with JHR, it is a very, very variable session because he's using his personal time to come out, to meet up with you. And then most probably you will be after the course, after you attend the course. Let's say you decided to join in the intrinsic value of the company. The class is starting on the 7th of December on Thursday. So the session will be arranged after the 7th, could be on the 8th December onwards. Same apply for the writing the Ichikubuku crowd indicators. That will be after the 14th. It could be 15th December onwards. And then also same apply for using MACD to spot the market turning point. The session also will be arranged after 21st of December. Okay. So I think for those who would like to join in, please join this session, scan in the QR code. Now again, earlier on we did mention for those who are really keen to join in our this face-to-face Are You Wealthy session, which I think you can join in as well, right? So the link I will be basically to send out to all, so you can actually to join in also, which is happening in the on 21st of December, 21st of November. There is exactly about a month from now, right, at this Lifelong Learning Institute at Paya Lebar. So you can join in and then bring more friends to join in to make it more exciting, to make it more because the games will be actually arranged to be played during the physical preview session with Chia, our web manager. Okay, so these are the code for those who sign up for this modular class. You can just scan in the QR code, or if not, just smile over to the chat. There is a link has been sent in the chat as well, right? So please take this last, I would say that opportunity. As you can see, the session is all scheduled on the last month of the year, on December 7th, 14th, and 21st, right? It's just nice because believe all of you, some of you may took leave, to clear leave for the year. So it's time for you to have a relaxing session to join in for this three session. In fact, you want to join all the three unique sessions also possible. Also possible because as all the dates is run independently, right? 7th December, 14th December, and 21st December, right? So you do a question. I mean now it's about almost 3 more minutes to 2 p.m. I'll open up another maybe 5 more minutes or 8 more minutes to 2:05 p.m. So you do a question, you take this last couple of 6 to 8 minutes here to post your question over into the chat or into Q&A. So I'm more than happy to answer a question. It's pertaining to what you would like to learn for this making investment work course, the IBF course, or this 2 hour workshop, or the physical preview session, which is happening on 21st of November, right? So these are the three things that actually I can assist you along the way if you do have questions still in mind. Okay, so yeah, again, importantly, you have to equip yourself, like what Jay always mentioned. We need to equip ourselves in